We are live. So I'm live on TikTok and YouTube. So there we go. Let's put up our little bag of my head. Don't want that. Let's put this up there. Let's change this, put that up there. There we go. Look at that. Right, what's falling on the floor there? Oh, drop that. Good stuff. Off to a good start, Grace. How's that cookie? Is it good? Nice one. Nice one. Actually, I might, yeah. Can I have one? Yeah. Yeah, let's have some cookie. Oh, thanks, baby. Thank you. I'm going to get crumbs of it. Extra chocolatey, are they? Okay, good. Okay. Let's give this a go then. There you go. Thanks, baby. Right, this is good. Oh, I'm already getting crumbs everywhere, Grace. Oh, okay. Let's see. Oh my goodness. That is good. That is very good. Hello, everyone. Don't be put off by the eating. It's lunchtime. It's Saturday. We're enjoying a nice little an office snack, aren't we? But we're here to answer your questions. Mortgage related, interest rate related. Let's have them. Oh, what was that? Let's have them. You know that? Yeah, it's I'm sensing a lot of positivity in the market at the moment. Certainly into next year, people are expecting. Oh my God, that looks good. So actually, let me show you this. Because based on the latest inflation figures, this could actually. What advice do you have for people in interest-only mortgages coming to the end of their options? Right. Okay, Meg. So if you don't have any what we call repayment vehicle running alongside it, then your options really are to sell up and move and repay the interest-only mortgage. That's number one. Or get in touch with a mortgage advisor, such as myself, and explore the options of a repayment mortgage so that you move to a repayment mortgage. I've done it before for a couple of, I don't think they would question me for calling them elderly, a couple in their 60s who, were an interest only. They were getting threatening letters from the bank. But they contacted me and we found them a repayment mortgage. The term was reduced due to obviously their ages, but we put them on a repayment. And they kept their house. They stayed living in a house, and it solved their problem. So that's it. There's two options really. You find a way of paying it off. You remortgage onto a repayment mortgage, or you sell up and move, and then hopefully you'll have enough equity to repay that and still have something for a new place. If rate drops and I fix to a new lower rate, do they credit check again? Some do. Do you mean about so when you're coming to remortgage, if you put in an application and the rate changes throughout, if you change during that process? Yes, some might, others won't. It really depends on the lender. Yeah, Sandu. Sorry, it really depends on the lender. I did one at HSBC, and it was covered with warnings saying, might credit check. Speak to an advisor. I was able to reduce my interest rate just before completion because of your video. Boom. Well done, Sarah. That's awesome. Glad to hear that. There you go. So I saved you some money as well. Even though you're not a client, I've saved you some money. Wow. Can I reduce my rate before completion? Yeah, you should be able to. Speak to your broker. They'll be able to do it for you. I'm proactively doing it for my clients anyway. I like to be able to send them. In fact, I was speaking to one of my clients the other day, and I said, "Did you see that email about the rate?" And she's like, "No." I went, "Well, I reduced it for you." She's like, "What? No way!" I saved her something like 40 quid a month. But remortgage next November. Use government help to buy. Yeah, is it worth buying them out at rates or pay? Okay, so at remortgage, some lenders will require you to repay that. So take extra borrowing to repay it. Others will be happy for you to keep it. But if you're keeping it, you've got to bear in mind that the interest on that does sort of step up as time goes by. So it can get quite expensive. But yeah, some want you to repay it, some don't. On year 6, it's still cheap money. The interest rate is still really low at year 6, so it's still cheap. So I don't know, you might, but of course, then if you're locked into a 2-year deal, you wait for year 2 to remortgage it again. So I think when the time comes, so 6 months prior to November, that's when you can start looking at it, and then start looking your options then. But be mindful that some lenders will want you to repay it as part of the remortgage. This is really good, by the way, isn't it? Just so you know, we are live on TikTok and YouTube at the same time. Good thing about YouTube is it records it as a video. So at the end of the live, you can go back in and re-watch it. If we've covered something that you want to go back and look at again, the video will be on YouTube. Clever, isn't it? So when going through the mortgage process and having been accepted for the mortgage, is it okay to finance things? Absolutely not. Nope. Because you're changing the details of the application. When you applied, you might have said, I haven't got anything on finance. Yeah, the application has been accepted. It hasn't completed yet, though. And so before it completes, they might do another check. And, you know, they found that you've got an increased credit card balance or you've got things on finance. They can therefore cancel the offer and that you won't be able to complete. What about mine things like a new phone? That shouldn't be a problem. To be honest, a new phone, you're probably going to have a phone anyway when you do the application. So that's probably going to be on your credit file anyway. So if you just do an upgrade or something, that's going to be all right. But not for big things like cars and sofas and fridges and all that kind of stuff, or loans, credit card balances, all that. Avoid that. Avoid changing job as well. You are welcome, Meg. Can I tell you something really annoying? I'm live because I'm meant to be on a call with a client now. So they booked it into my diary for a Saturday afternoon. I've rung them a couple of times, no answer. That's really annoyed me because I've come into the office specifically for that. So that's a bit of a pain. Hello, UK Aviation. How's it going? UK Aviation, are you a fan of Big Jet TV? Like we are in our household. We like a bit of Big Jet TV when there's a storm on. Love that. Or just to have one in the background. Yeah. Easy, son. Oh. What are my prices to help people remortgage? So you mean my fees? So if I do a product transfer for you, then absolutely free. Free. If we do a remortgage, it's £500, which is split into 2. So a £250 assessment fee, which is payable at the start, and then £250 when we get you an official mortgage offer. But product transfers are free. Also, how warm is it outside today? Very weird. We were surprised at that, weren't we, this morning? By the way, you got chocolate all around your mouth. You're such a monster. Mortgage offer depends, but about 3 months, sometimes 6. It'll be written on the offer itself as to how long it's valid for. In some cases, you might be able to extend an offer. Not every lender does it. Is it okay to have loads of unused credit cards, but use half and pay off each month in full? Or use one or two and pay off in full whilst going through a mortgage? Um, there's different schools of thought about having sort of open credit cards with zero balances. Some people say you should close them all down and just get rid of them, get them off the credit file. Other people say it's a positive because it shows you've got access to credit and you're not using it. And I can see both sides of the story. So there's those two arguments. So actually, if you balance it up, having open it probably won't make a difference. I don't think it does make a difference. But if you use a credit card and pay it off each month, and you've got a track record of doing that, then that's absolutely fine. If it's something new you start doing during application period, the lender, it depends on what point they look at it. Do they do the credit check on the day that you've got the biggest balance on there before you've paid it off? So it's a bit of a risky game, but if you've got proof on your bank statement, you're clearing it off every month, then it should be right. You've gone to the proper head office underwriting. It takes as long as they want. No way to say, I'm afraid. Depends how much in depth they're looking into it. Depends what's potentially been flagged on it. Oh no, we've got someone who works in pricing of mortgages. Hello. Any exciting news you can give us about pricing? You all right, baby? Okay. Is the door open to the boardroom that way? Go out and have a look. Go around. Nothing exciting. Reprices are, of course they are. Of course they are. Sorry, I was only joking. Is it open? Go through there then. Yeah. Are you going to tell us the lender you work for? Are you going to divulge that information? I bet you're busy at the moment, though. Crikey. When will the Bank of England start reducing the rate? Well, good question. I can tell you swap rates are slowly. Exactly. Yeah, I keep an eye on them every day. I mean, I've just checked them this morning, and it's amazing to see sort of 7-year money at now below 4%. I don't think it'll be long before potentially we got 5-year below 4%. And now the 2 years are at 4.6, and I'm expecting to see more 2-year fixed coming through at maybe sub 5%. So it could be quite good. So when will the Bank of England start reducing rate? It's a very good question. I've done a video recently about how traders are pricing in the interest rates, and they're kind of thinking sooner rather than later. To be honest, I suspect certainly would have seen something by the spring. I think that's for sure. I actually do quite agree with this graph here. I think it's quite valid. I can tell you what rates coming down. Yep. Respectfully, are you single? I'm afraid not. I don't know. Is that afraid not or not? I have a mortgage, but recently I have some defaults in personal loans. Can I do a product transfer? You should be able to do a product transfer. It just depends which lender it is and how sort of what their processes look like, whether they do a credit check or anything. So difficult. Would you recommend fixing to 2 or 5 years with the PM forecast? PM? That rate on there is base rate, Bank of England base rate. That is not mortgage rate. Let me change it to this. I don't really use this one anymore because it's out of date now. It's quite out of date. So this is fixed rate predictions. Think rates in the term. Yes, I agree. This graph is already out of date because we're already seeing 5-year fixed below the 5% mark. In fact, we've also seen a 2-year fixed below the 5% mark. So I can't advise you whether to do a 2 or 5-year fixed on TikTok, I'm afraid. But you really need to speak to your broker. It really depends on the circumstances. Ooh, OIS forwards date on BOE. Hang on, let's get that. Bank of England. Yeah, this is just the best. So what page are we looking for here? You find out on a yield curve page. Where's that? About topics. Markets. Banking on market intelligence. Sonia interest rates. I can't find it. So I can't find it on there. Nationwide doing a 10-year fixed deal, worth it. I'm loath to ever recommend a 10 year. 10 years is a big commitment. A lot can happen in 10 years, both in your life and in the wider world. So are you happy to fix for 10 years? The reason to fix for 10 years is for certainty of payment for that whole length of time. Because you will literally lock in a rate and you probably don't have to worry about it for 10 years. But fixing for 10 years is an amazing time to fix for. It's a long time. Type in BOE yield. Okay, BOE yield curve. BOE yield curve. Yield curve. Well, there you go. That worked. There we go. So you can. Okay. It's implied rates. What am I looking for on here? Instances, nominal rate curve. So what is this showing me? I've got two lines. Scroll down, you can see forward rates on CSV files. Okay. CSV files, forward rates. Where are we looking? Interpreting yield curves, data updates. Oh, downloads. Latest yield curve data. Here we go. No, that's not there. Archive monthly data. Okay, let's look at the monthly. I'm not seeing forward rates. Let's look at daily. Liability curve. I'll tell you what, can you send me a link to Philip with 1L at mellowfinancial.co.uk? Yeah, when you get a chance, if you can send me a link. Oh, yeah, swap curve. OIS swap curve. Okay. Here we go. Got it. All right, let's have a look at this. Downloads. Oh, yeah. Open up that. 2016 to present. Let's have a look at this. Oh my God. Jesus, data coming out my ears with this. Bloody hell. They have got 60 months of data. Yes, I see. Bloody hell. Right, I'm going to have to spend some time looking at that, but thank you for pointing me in that direction. That's very good. Can I mortgage on half a house if my dad's owns the other half? No, I don't know. I have to have a look at that. You're nothing, mate. Thank you. Appreciate that. I'm something to someone. I am something to someone, I hope. Do you think interest rates on 9% loan to value are less than 4.5 in 2 years? I think there's potential for that because we've got obviously a 2-year fixed from Halifax, which is 4.97 at the moment on a 2-year fixed. Or was it on a 5? No, it was on a 5, sorry. So I think, what's best rate around the moment? Probably about 4.53 on a 5-year fixed. Any advice on a purchase of a first property or ways to help with deposit? So there is 100% mortgage out there if you wanted that. There is right to buy where you don't necessarily need a deposit, but obviously you need to be in a council house, or a concessionary purchase where you're buying off a landlord at a discount. You don't need a deposit then. Does credit score affect my ability to get a mortgage? I have a deposit ready. Potentially, not the credit score, but the reasons behind the credit score is what will affect you on a mortgage. Right, 1 second, people. I'm just going to have to check where my daughter is because she's run off somewhere. Although I hear someone coming. 1 second. You're back. Excellent. Do you want to shut the door? Excellent. Well done. It was a default on credit card from 4 years ago. Okay, all right. So in that instance, you'd probably be able to fit with a few high street lenders actually. Lewis, get in touch. We'll be able to look at that for you. Certainly. You cannot re-1.5 house. That's what I was thinking about. Should I remortgage now, being offered 4.89 5-year fixed, or should I wait, please? What are you waiting for? I suspect you're going to wait for rates to go down. But defaults do stay on the credit file for 6 years. They do, but lenders take differing views on them and how they don't touch it, on how they interpret it and how they add loadings and stuff. Is it possible to get a mortgage with an IVA? It is possible, but it's really, really, really difficult. Very difficult. Should I wait 6 months before getting a mortgage or just buy now? I mean, rates, we are seeing rates reducing, but when we say rates are reducing, that could be a tiny, tiny percentage. So it's really up to you. I mean, if you can afford it now and you find something you want to buy, then buy it. There comes a point where you just have to live in the now. And, you know, if you're waiting for something, you're going to be waiting forever, I think. 2 or 5, I can't answer the question about whether you should fix for 2 or 5 years, I'm afraid, because I can't give that advice on TikTok. I obviously can give that advice if you're a client of mine, but not on TikTok, I'm afraid. I do know about offsets. There's not many of them about at the moment. Can you withdraw equity? Yes, you should be able to. Depends on the circumstances. Crikey, I've got so many questions. If I miss your question, I apologise. I wouldn't trust many predictions on the Bank of England. Yeah, I have to say their handling of interest rates recently has been pretty poor. Do we have a pencil sharpener? Sorry, do we have a pencil sharpener? I haven't got one here. Have you got one? Oh, we'll have to wait to get home. Could you speak into the first-time buyer scheme? What first-time buyer scheme is that? You can't trust the Bank of England, but you can trust the financial markets. Exactly. Can you withdraw equity when on mat leave? Depends what your circumstances are with regards to going back to work after mat leave. If you're going back on a like-for-like basis, then yeah, it shouldn't be a problem. Will interest rates spike in the next 5 years? Who knows? Fixed rate ends in January, got quoted 6.2 down to 5.6. Should I? You're running out of time. If you want to do a remortgage for January, you've pretty much run out of time already. You're going to have to do a product transfer. Have contract going back full time. Cool. All right then. In that case, you should be all right because they'll do it on the sort of your pre-mat leave income. The affordability worked out on the pre-mat leave income. I have a 40k deposit and I earn 70k. Will I be likely if I can get a 350 house? Possibly not. Possibly not. Let's have a look. So 350. You got another one. We're gonna have to take them home and give them a sharpen, aren't we? So you need to borrow 310,000. We divide that by 5 times. Yeah, actually, you might be able to, assuming you've got minimal outgoings. Then you might be able to. It's all right. We'll have to sharpen it when we get home. Can first-time buyers withdraw equity to buy a buy-to-let? Well, you're a first-time buyer. Where are you getting the equity from? Any way I can avoid paying 10k stamp duty? No. Please, can you explain the impact of remortgaging when you have a baby? Baby class is a dependent, so they may take some money off. You might have childcare fees, nursery fees, which are potentially committed expenditure. So that could go against your affordability for when you come to a remortgage. Okay. Do you know anything about shares? Yeah, but I'm a mortgage advisor. What are the rumours regarding stamp duty cuts next week? Who knows? You trust anything the government tell you? My mortgage broker has placed my mortgage to a different lender. Was there a problem? I don't know what you're talking about. Yeah, put it in the bin. Difference between remortgage and product transfer. So remortgage is moving the loan to a new lender. Product transfer is staying with the existing lender but moving to a different product. Are you saying mortgage rates are going down? They were going down. They are going down. They're not going down in huge chunks. They're going down by slight readjustments. It's very, very small movements. I've got 10K in lifetime ISA. Should I keep paying into it or keep the cash? I'm a mortgage advisor. I'm not a financial advisor, I'm afraid. Remortgage booked for April 24, 5-year fixed rate reduces slightly before it activates. Thoughts? Well, change your rate before you complete. Is product transfer Santander looking good? Well, it depends what the rate is and what you want to fix for. It's always worth speaking to a mortgage advisor because they will compare your potential product transfer rate with the rest of the market. So, it's should I go tracker or fix? Really depends on your circumstances. I can't answer that kind of thing on a TikTok live. It's against the regulations because I need to know your circumstances in more detail before I can actually make that recommendation. Can you use a lifetime? Oh God, don't even go down to the auction route. Oh, you're in for a world of pain going down the auction route. Where can you get a 2-year fix for less than 5%? Well, it depends on your loan to value. Why do you keep ignoring my question? I don't know. There's so many questions flying through. I miss a lot of them. What's your prediction for 2024 as a whole for rates? I think base rate will start coming down. So the Bank of England base rate will start coming down. That's certainly what a lot of people are saying, potentially from the spring point. And already mortgage rates, we've seen them coming down. We've seen the swap rates reducing. So I think, there's going to come a point where it stops because it's not going back to 2 or 1%. I can tell you that now. So I think for mortgages, I think we'll be seeing more rates starting with a 4% for a range of loan to values. At the moment, we're really seeing that in a 5-year fixed market, but we should soon start seeing it coming into the 2-year fixed market, I think. My childcare is 2K a month. Wow. Can I front load it so it doesn't appear in my banking? How do you mean front load it? Pay it all in one up front? How do I show income under a company for a mortgage? Can I use my actual job salary? How do I show income under a company? So are you a company director? If you are, we need at least 1 year's accounts and tax returns. Currently at 1.94. God, got to get renewed. Yeah, stressful. So you're probably looking at 4 or 5%. So it's quite an increase. Where can I get a 2-year fixed rate? I don't know. I haven't seen any. What about 3-year with a low fee in Q4? 3%. I don't know. A 3%, you're going to have to have very high loan to value if there's any chance at all in 2024. 10% deposit enough these days? First time buyer? Yeah, I mean 10% is a good deposit to have. It just depends whether that will get you, the house or flat or whatever you want. Most questions you get need a crystal ball. I know. Tell me about it. I still give my opinion and stuff, but it's not. It's just based on stuff I see sort of in the press and what you hear from the market. Be enough for the 2-year fixed, 5.07 no product fee. Got till March. Do I go? Oh, hang on. Well, if you take it now, you can always change it before completion. Does remortgage mean? It means refinancing your mortgage to a new lender, probably for a better rate or a new terms. You can buy at auction with a mortgage, but I wouldn't bother. Do you see rates coming down next 6 months? I see rates coming down next week. They're changing all the time. Literally every single day, I get an email from a lender saying we're reducing our rates tomorrow. They're very minor reductions, though, so let's not get excited. They're not huge decreases. They're just trying to competitively price their products against each other. So let's take Nationwide and Halifax as prime example. So start of the week, the other week, we had Nationwide come out saying we're going to do a 5-year fixed at 4.64%. Awesome. A couple of weeks later, we get Halifax come out saying, we're doing the same, but we're doing it at 4.53%. Beat that. So at some point, if the swap rates keep reducing, Nationwide will come out, probably say, we're going to do one at 4.49. So it's just this little bit of a price war. Competition is great. Competition brings that. But there is a point that they have to go, there's a point that they'll go to. So if the swap rates kind of stabilize and then start bumbling, then rates will stay where they are. Blocked. Cheers, Luke. Will ever get back down to 1.5? No, not unless something catastrophic happens. How close to the date of my next rate starting can I safely change? I'll probably say 2 weeks before. How soon should I speak to a mortgage advisor? My fixed rate ends November 20, 6 months prior. So when it comes to remortgaging, you can start the process 6 months before your current deal comes to an end. What is house over offer? What do you mean? Do you mean house under offer? Please can you elaborate on why you wouldn't buy at auction first time buying? Because it's an absolute bloody nightmare. You have to exchange, you have to pay a deposit there and then. Who knows what state of property you're buying. Not many lenders you won't have a mortgage offer by them because lenders don't know the address they're lending against. So it's just a pain. Would a first-time buyer be able to get 5% deposit mortgage annually? Yeah, there's 95% loan-to-value products out there. It's quite a few lenders. Yeah, absolutely. Under offer means that someone has put an offer on the house, and the vendor has accepted it, and so it's currently under offer. Technically, it's sold subject to contract. Will we get down to 3.5 next 12 months? I don't think so. Not in the fixed rate market. Interested to know personally if you would personally go 2 or 5 year fixed. I can't give that advice on TikTok, I'm afraid. I can only give that advice to my clients once I know their full situations. Personally, I'd be doing a tracker. Personally, knowing my circumstances and our finances, we'll be looking at a tracker. But I mean, that's the end of next year when our fixed rate ends. So currently, I'd be looking at a tracker, but things might change. So if, say, I have 500k, I find gross rental yields 8% or so. Does everyone say 4.63, 5 years, a good rate, 70% loan to value? Yeah, I can. It's one of the good rates out there. It's one of the better rates out there. I can't say whether that's a good rate for the future because who knows what's going to happen. But right now, it's one of the good rates that are on offer. What's a tracker? So a tracker is a product which tracks just above the Bank of England base rate. So let me change that graph for you just to help explain this. So that graph is showing the sort of expectations for the Bank of England base rate. Now a tracker will track a little bit above that line. So the benefits of a tracker is if the Bank of England base rate falls, then your rate falls as well. However, if the Bank of England base rate goes up, then your rate goes up as well. So it's a bit of a risk involved. You have to sort of decide what you think the Bank of England base rate is going to do in time. So is a tracker suitable? Do you have the funds to deal with any increases, for example? That's what a tracker is. I've locked in a 4.3 rate on my semi mortgage. So yeah, kicking soon. Good. 4.3 currently in the market is a good rate. What's your honest opinions on part buys? I mean, underlying. Do you mean shared ownership? Do your research when it comes to shared ownership. There's pros and cons of it. Really helpful. Got a 5-year fixed in 2021 at 1.6. Yeah. Dreading new fix. Yeah, so 5-year in 21. So you're gonna 2026. Okay, 2026. You're gonna have a bit of an increase. Not as much as people who are fixing now or in the last few. You'll have a bit of an increase. I don't know to amend stamp duty. I don't think so because right now, for example, first buyers rarely pay stamp duty due to where the limits are. So I think they've got that model right. But of course, any changes to stamp duty, there has to be money to be able to deal with it. So I don't know. I also wouldn't trust a word that comes out of any government minister. What are the cons of shared ownership? You tend to buy a leasehold, so you've got ground rent you have to pay. You still have to pay rent. The location of shared ownership properties tend to be a bit dubious on a development. Trying to sell it at the end is an absolute nightmare. Staircasing, very few people actually staircase to get to 100%. What else? Very difficult to get hold of. There's a lot of competition to get a shared ownership property. So yeah, it's quite tricky. I've got a football accurate. Going to buy a well, crikey. What have you put a pound bet on multiple instances? It's going to win you like 400 grand. There you go. Shared ownership is horrific. I regret getting into it. Lost loads of money. Not my words. Someone's there. Can you fix your rate mortgage for shorter term than 2 years? Not really. No, there's none out there. 2 years tends to be the shortest at the moment. I'm 6 months into trying to buy shared ownership. Nightmare. Yeah, I hear it. I hear it a lot. Trying to get one, the competition for them is huge. So trying to get one when they're released and get on it. Being told there are now 1-year fixed. Is this true? Let me have a look. Let me log into my system. I shall tell you if there are 1-year fixeds. I would say I've sourced one. You'd be better off going on a tracker, to be honest. If you look at a 1-year fixed, would you say go on to variable rate next time? When you mean variable, what kind of variable rate are you talking? Are you talking a tracker or the lender's standard variable rate? If it's the lender's standard variable rate, I would say absolutely not. Do not ever go on that. Because those rates are huge. Yeah, possibly 1 year in retention. Yeah, that makes sense. But let's just have a look. Let's just put in some basic details. Let's do a. Oh, no, I don't want 1 million. There we go. We only want fixed. Let's have a look. Let's look for the shortest amount possible we can get. Do cost over 5 years. Shortest possible we can get. Let's have a look. Best tracker rate currently. I mean, there's some at like 0.2 above base rate. So let's just amend this. My fixed rate ends in January 26, currently on 2.5. Okay, you probably be all right when that comes up, Let's do a custom from, let's do 11 to 15 months. Let's have a look. It gets better. Yeah. Okay, just looking to see what the shortest fix we can get. Yeah, nothing. Let's edit the filters. Let's do 12. Let's do 1 year plus. Actually, no. Let's do 12 to 23. Is there an optimum percentage to put down a first time buyer? Not really. The minimum you can put down is 5%. The minimum you can put down is 5%, but of course, the more deposit you put down, the better, because you'll be borrowing less and your rate will probably get better. I'm jumping. I'm getting nothing for a 12-month fixed. What's best? 2 year fix? How's 24 years? I have to know your circumstances, Jamie, to look into that. Are you bored? What are you doing? Let's have a look at some questions. Oh, looking to buy early 25. Would it be best to go to variable
or fixed for 2 years? Well, I suggest it's best to do what's what's available at the time in 2025. Any idea why Halifax aren't offering 3 years fixed anymore? They do. I've seen some. What's the best tracker rate you've seen with who? Seen one at 0.23. I think that was with Leeds Building Society. Best buy-to-let rates were 20%. Well, all buy-to-let minimum deposit on a buy-to-let is 25% anyway. Don't touch it. Limited companies, they tend to be relatively high. The fees are the problem when it comes to buy-to-let. Is affordability still 4.5%? 4.5 times is a good ballpark to go on. It depends. I mean, if you're a higher earner, you can potentially get 5 or 5.5. Some first-time buyers can get 5.5. What are you doing? Are you being a dinosaur? Ella, my fixed rate ends in 2 weeks. Am I best going to tracker rate until rates drop or fixing it now? You've left that far too late to start looking at your options. Do tracker rates have minimum length? Some tracker rates do lock you in for a period of time. But when I'm talking to my clients, we're talking about sort of trackers with no early repayment charges, so you can come out of them. Certainly, if I was going to go on a tracker, I'd want one with no early repayment charges, so that I'm on that tracker for a reason. I want to be able to get off it should circumstances change. I started looking in May, got a rate 4.9 for 5 years. Okay, what's the loan to value, Ella? Depends. And who's the lender you're looking with? Just had my mortgage offer through 40%. Okay, nice. There probably are better rates out there. NatWest. NatWest. They haven't done anything recently. Give it a week, Ella. NatWest. I haven't heard anything from them recently, so we might hear something next week. It's very much a might. But yeah, there's the potential they might do something. I don't know. They've been quite quiet. But yeah, you might be able to secure lower than that 4.9 on a 40% loan to value, certainly. You don't want to fix a 5? Oh, yeah, okay. Well, see what they do on 2s then. But I don't know anything. I don't know that they're going to do anything. I'm just saying that recently they've not put any rate changes. So thinking aloud, they might be kind of due, but there's no guarantee of that. My mortgage ends in July. Should I start looking at 6 months prior is when you should start looking. So when you look 6 months prior to your deal ending, that's the best time to look. Just to let everyone know, by the way, this is going live on TikTok and YouTube. Good thing about YouTube is it records it as a video. So that'll be when the live is finished, it's going to be up on there so you can watch it back on there. If there's anything that you've missed or anything you want to look at again, then head over to Mellow Financial YouTube account and you'll be able to see there. And don't forget to subscribe because there's some behind the scenes footage that goes up on there. Great. Grace, quiet please. Also, if you want to get in touch, then on TikTok, the links are in the bio where you can book a call straight into my diary and I'll call you back and we can have a discussion about what you're looking to do. So first time buyer advice, all that kind of thing. So do feel free to book in a call or you can use the link in there to send me an email. If you do send me an email, just keep an eye on your junk mail for the reply because sometimes they go in there. What credit score for high street lenders just cleared all debt, previously bad score? So it's not about the credit score. We're not interested in the actual score. The score is really just a reference for you to see how your general credit footprint looks. We want to know the details behind the credit score. Now, if you've cleared it all off, then, fine, good stuff. Well, you'll be able to prove that. You'll be able to show sort of closed accounts, zero balances. So when the application goes in, me as a mortgage broker or advisor, I will put on the application saying, all debts recently cleared. Please see the evidence that we've uploaded with this case. So hopefully it should be good. Hi, Philip. Is a mortgage possible with 2.5K default that's settled and 4 years old, no other issues? Yeah, Jack, you would be able to get in touch, be able to sort that out. Does general student debt cause affordability to drop? If we're talking things like student loans, not really. Well, because we'll go off your net income figure. Now, of course, student loans come off your payslip before tax and stuff. So we just use your net figure. Would you advise to clear all debts possible for remortgaging? Yeah, if you can, because it would improve your affordability. Certainly. If I want to move in by June 24, when do I need to find a mortgage in principle? Well, it really depends how long your house hunt is going to take and how picky you're going to be. I'd say the earliest opportunity if you can, because we can always get you another application in principle. Don't worry about those. I mean, they can just be created, no problem. My fixed rate is finished. Ooh. Halifax have offered 5.25, 2 years fixed. Do you think, if your fixed rate's finished, you're now on a lender's standard variable rate, and I absolutely detest them. You need to get off that ASAP. That's the only thing I could give there. Jake Kenny, what's the question? If you find a property, BMV, can that be used to deposit like the council house? Don't think so. No. What's Halifax best for year 2 year right now? Depends on your loan to value. I can't give advice about going for a 2 or 5 year fixed on TikTok, I'm afraid, because I need to know your full circumstances. So in this coming January, it's going to finish. Okay. Still not a huge amount of time if you wanted to remortgage. You haven't got a huge amount of time. You'd need to get on that pretty sharpish. But it's certainly worth getting in touch with a mortgage broker, because they'll look at your product transfer options and then compare that to the market and give advice about what's probably the best course of action in terms of overall costs and that kind of stuff. Feel free to get in touch if you like. Certainly be able to help you out with that. Is it possible to consolidate a ported mortgage into one, or just align them over time? If you wanted to consolidate a ported mortgage, you're probably going to have to pay the early repayment charges on it. So is it actually worth doing that, as opposed to just waiting? And you might want to put one on a tracker until the other one comes into line, and then remortgage two at the same time, ensuring that the tracker does not have an early repayment charge. But if you wanted to come out the ported one, you're probably going to have to pay an early repayment charge. Does overpaying your mortgage during a fixed look good when a remortgage? Doesn't really have any difference on the look of it. All it means is you will be remortgaging less, because you'd have been overpaying, so actually paying off the capital loan. So you just need less to remortgage. So from that aspect, it is good. When do you think the rates will drop? Being a variable paying fortune, I'm not expecting them to drop. They're not going back to 2 or 1%. This is Pantheon macroeconomics forecast. Rates are not going to 2 or 1%, so I'm not expecting them to drop to that point. All we're seeing at the moment are sort of minor corrections as swap rates potentially change in the market and that kind of thing. Not expecting a drop. And this graph is showing bank rates, a Bank of England base rate. And I actually quite agree with this. I think, yeah, spring next year. I'll be looking to sell in 2020. Interest rates reduce again. Will there be a huge price? Who knows? I think house prices will generally always increase over the long term. We're an island nation. We don't have enough houses. Therefore, they're an expensive asset. What do you think it'll go to? What do you think the lowest it will go to in the future? What are you talking, base rate or fixed rates? When it comes to Bank of England base rate, it won't go back to the lows we had. That was a catastrophic financial event that created that. So 3.5%, I think is viable. Remember, they've got to kind of keep savers and borrowers happy. So, yeah, the new norm fixed rate. Exactly. Dina, I think you're absolutely right. We are normal. This is normal. Actually, if you look at it historically, the rates we have now are still on the low side. So don't look a gift horse in the mouth. Is that the phrase? they are still low in comparison to historical rates. So interest of 1-2% would be 3 or 5. Yeah, Dina speaking sense. Are you having a maths debate? No, we are not having a maths debate. No. How much can you borrow with a double income of 90k? So is that a total? The joint income is 90k. Feasibly, you could borrow potentially 495 grand on that. Very, very rough. Looking to remortgage 230k in June 24. So wondering what I would get at the minute to a 5-year. Well, on a 5-year, I can tell you probably get about 4.53. On a 2-year, you're probably looking at 5%-ish. Can do one. Sorry, just had to block them all on. If rates change during the buying process, can you switch down? Is there a cut-off per se? Yes, you can. You can change it. I mean, we're doing it a lot for our clients at the moment. And there does come a point where you kind of think, yeah, you've got to start probably 2 weeks before completion. And that's always difficult to judge because completion can just come out of the blue. So it's a tricky one, but you can change, yes. Would you recommend putting 65 deposit down so mortgage should be paid off in 10? Put down as much deposit as you can because it means you just have to borrow less. So then you feasibly get better rates. I sold my flat. I'm traveling. Does where you currently live make much difference to banks? Yeah, they have some considerations about, if it's going to be your main residence, but you work to the other end of the country, that's going to be a bit weird. Can the bank pull the offer if you ask to drop down? Potentially, they may do a check. Something may have happened in the background. I think it's very unlikely because if you think about it, if the rates are dropping down, that's a positive because your payment's going to be less. So, big scheme of things, I think it'll be very, very odd. You complete next week. If you want to change the rate, you need to do that swiftly. Is there something for 50 plus people? Yeah, absolutely. I've sorted out mortgages for 60-year-olds. There's nothing special in terms of products for 50 plus, unless you are talking about lifetime mortgages, but that's something totally different. But yeah, we can get you a mortgage and someone in their 50s. Say I've done it for people in their 60s. But there's no specific special products. Unfortunately, you don't get an OAP's discount when it comes to mortgages. I'm not saying you're an OAP if you're 50, obviously that's 65, but there you go. We have a good rate, so we're happy. Good. Fixed for 2 years, so let's see what happens then. Good. Well, I'm glad you're happy. That's good. As long as you're happy, then that's all that matters, isn't it? Are you happy, Grace? Are you a happy little munchkin? Good. Do you want me to finish the live?
No.
Oh, no. Are you learning about mortgages while I do a live? Are you going to be my new recruit? Are you going to do your qualifications? Little do you know that I'm building this business for you.
Yeah.
Well, thanks to Mortgage Broker. You guys are invaluable. Thank you very much. I'm glad you see the value in a mortgage broker. A lot of people just say, "Oh, I'll do it myself." There you go, Grace. Someone saying hello. Say hello. Proper big wave. What are you doing? Can I get a mortgage on 2 years of self-employed and employed jobs together? What was the most recent? Probably not. I mean, what's the most recent? I don't understand why you wouldn't use a broker, to be honest. Yeah, they get much. If you go to the bank, for example, you get the bank's products. They will tell you these are our products. Go to NatWest, they'll only offer you NatWest. Brokers, I mean, I have all the lenders in the market at my disposal. So, potentially there's better deals there. It's not just access to the deals. I hope you see it's not just access to the deals. It's also the experience, the knowledge, the assistance. So the whole ethos of Mello is to take all the stress away from you, the client. So, we'll be answering questions from lenders and heading off inquiries before they have to get to you. So the benefit was a broker, not just obviously the access. Not just the access to the rates, but it's the experience, the knowledge, the expertise. I mean, a lot of people are, I'll just do it myself. Whereas I take the analogy that I could paint my kitchen myself, but I'll do a bodge job of it. I'd much prefer to get a professional to do it and know it's been done well. Do banks prefer to deal with brokers? Yeah, I mean, I think so because certainly, let's take. I had an interesting webinar I went to about fraud the other day, and brokers are the first line of defence when it comes to fraud for banks because there's numerous checks that we do. Also, we put the stuff in. We are a route for business for the banks and stuff. So yeah, I think they do. 100% it was a breeze, told us what we need to do, and we did it all in days and got approved. Exactly. All our processes are designed to be slick, stress-free, all that. We're on a Help to Buy mortgage, ends in March 25. Would you recommend remortgage to pay it off once dropped? Okay, Lauren, so when you come to remortgage with Help to Buy, there are some lenders who actually require you to pay back the Help to Buy element. On the flip side of that, there are some that allow you to keep it. However, if you keep it, it does potentially affect the affordability because, of course, it's a loan that you're now having to make payments on. Granted, in year 6, the interest on a Help to Buy loan is very, very small, but it does increase quite a bit after that. So it's really worth speaking to a mortgage advisor. I'll happily help you out on it, Lauren, of course. To run the numbers to see what it looks like and what the affordability looks like and the circumstances are, and then you can make a more informed decision about what you want to do. There's all kind of strategies that go into it and options. So get in touch if you like. If anyone wants to get in touch, then just book a call in using the link in the bio into my diary, and I'll give you a call at that time, or drop me an email using the link in the bio, or it's Philip with 1L at mellowfinancial.co.uk. We have a 2 or 5 year fixed decision to make. Yes. Yeah, it's a tricky one. You have to think about what's happening, what your circumstances are. No problem, Lauren. I'll happily help you out on that. I did my sister's. She was on a Help to Buy. Sorted her out. What's the quickest way to fix your credit score? Pay your debts. Service your debts. Don't get loads of credits. Don't miss payments, all that kind of stuff. Does history of renting help with a mortgage? Unfortunately not. It's the big. It really should, in my opinion. Having said that, there is Skipton, who have their 100% mortgage designed for renters who have got a track record of renting and can prove that, and therefore they don't need a deposit. So I applaud that because that's a great innovation to bring to the market, and rent certainly should be considered because it's effectively a mortgage payment in a lot of cases. Is there a minimum amount of years a person should stay at a property before selling and moving again? No, there's not. The only consideration there would be around that is if you are on a fixed term deal, if you wanted to come out of that deal, you'll probably have to pay an early repayment charge. So that would be the only concern. Never had any debt, but want to build my credit score was best efficient. Okay, all right. So if you've not had any debt, then if you get a credit card and do some little spending on it and clear it each month, that should help your credit score, credit file. But to be honest, your score, it's not about the score. So when it comes to a mortgage, it's not about the credit score. It's about the credit footprint itself. So if you've not had credit, I'm sure you've got an absolutely adequate credit footprint for a mortgage because they will look at it and go, right, this person's got no debts, they've got no credit cards, nothing on finance. Great. Their affordability is up here because they haven't got to pay for all that stuff. You can get a credit card and just use it for small spending, but pay it off every single month if you wish. That would have an impact. Oh, my throat's getting dry. Should I reapply for my mortgage close to closing date? Would it risk negatively affect me? Why would you reapply for your mortgage? So I don't understand that question. Should I reapply for my mortgage close to closing date? But it's not a reapplication. I'll just be changing the rate or changing the product. I have bad credit score in Ireland, but if I move to the UK, would this still affect me in the UK? Most likely. You'd have to lived here for a while, all your residency, all that kind of stuff would have to come into it. It's easy to do. There is a slight risk. If you ask your broker to do it, they'll be able to do it for you quite easily. If you have a dip, how often do you get declined when you go to full application, please? Can happen quite often because, of course, a dip is very light underwriting, whereas when you get to a full application, they do a full assessment. They then obviously have to value the house, all kinds of things. So it could change it. The risks are they reassess your case and decide they don't want it anymore. Finished an IVA 3 years early, 12 months ago. Any mortgage available doesn't require 20% to 25% deposit? Not really. Not that comes to my mind instantly. So the IVA was settled 12 months ago. Let me have a quick look. Was it absolutely settled? Absolutely settled 12 months ago. IVA. Years satisfied. Let's put 1 down. Let's have a look. Okay, so we got, usual suspects here. So let's have a look at this. We'll lend to clients with unsatisfied IVA. Very few lenders. We're able to lend applicants as long as they're registered over 6 years. Okay. Generation does not accept applicants who have been. Well, why is it coming up saying yes? West 1, what do they want? You're going to struggle, really. Can you explain why paying rent doesn't show on your credit score? Because it's a private transaction between you and a landlord. It's not an actual credit agreement. I look pissed off, do I? I'm not. I'm quite happy. Thanks. House is valued at 170k with 80k left to pay. What loan to value and rates am I looking at? Well, you just divide the 80 by the 170. So you're 47% loan to value. So you're looking at, if you're looking at a 5-year fix, that'll be about 4.53. 2-year fix, probably look about 5%-ish. I co-own with my brother, but want to purchase with my partner. Do I have to pay higher? Yeah, so you'll effectively be buying a second property, so you'll have to pay a 3% stamp duty surcharge. Thanks for nicely jumping in my comment. I'm sorry if I missed it. They do go quite quickly. I'm not looking at the screen constantly, so calm down. Do mortgages work differently with leaseholds and freeholds? Not really. If it's a leasehold, the lender's going to want to know how long is on the lease, how long's left, because they will have criteria about they don't lend to certain points below. It will get to 15% by 2025 due to Brexit. Really? Okay. George, if you're waiting for something, you'll always be waiting. If you come off the house with your brother, then you won't have to pay a second property stamp duty surcharge. Can you get a large mortgage of 800k with 10% deposit? Potentially, but you're going to need a huge income to pay it. So information about 100% mortgage. So it's really designed for people that have got a track record of renting, no credit issues recently. What it does is it takes how much rent you've been paying and then works out how much they'll be able to lend you on that basis. It's on a 5-year fixed, 100% deposit. It doesn't always give what you need. So people, when they're looking at it, they have to make a compromise either on the kind of place they buy, i.e. look for something cheaper, or moving to another area where the houses are cheaper. It's a decent product. It's innovative. It's showing the right intentions, but few people are satisfied with the affordability it comes out with. I have part repayment, past interest. Should I try pay off first? Part repayment, part interest only. Well, unless you've got a repayment vehicle in place for the interest only, you're going to want to clear that. Because otherwise you're going to be hit with a big bill when that term comes to an end. Should I overpay my mortgage or save? I can't give that. I'm only a mortgage advisor. I'm not an IFA, I'm afraid. I can tell you the benefits of overpaying the mortgage, but not on potential savings. As it's quiet, I shall tell you that if you want to book in a call, I've done a video. There's a pinned video in my profile about how you can book a call easily into my diary, and I shall give you a call at that time. Would you advise stretching to a 10% deposit if possible for better rate? Yes, if you can. You will get a better rate and a greater choice of lenders if you've got 10% deposit. Do you think 4.85 for 5 years is a fair offer under the current climate? It depends on the loan to value on that one. It's there or thereabouts. It's under 5, so that's good. Yeah, so just going back, there is a pinned video on TikTok. Here's Freddie. Here he is. If you're considering Freddie, you're a legend. Here we go, Freddie, a dear client at the moment. I'm helping Mr. and Mrs. Leather through their purchase. So yeah, do what he says. Booking a call. Hope you're well, Freddie. First time buyer looking to buy around spring 24. Recommend a fixed or track. So first time buyers. Fixed rate can often appeal because it gives certainty of payment. When you're buying a house as a first time buyer, it's the biggest purchase you've made in your life to date. It's a big commitment. So going on to a fixed rate, you know how much it's going to cost you every single month. You can budget easily because there's other things that come along with owning a house. You've got to maintain it. You've got to pay all the bills, all this kind of stuff. So having a fixed budget, first time ownership, is quite appealing. However, a tracker, it obviously has the benefit if the Bank of England base rate goes down, then your payment will go down. But it comes with the same risk that if the Bank of England base rate goes up, then your payment goes up. So first time buyers, a lot of them use all their cash they can and try and maximize their borrowing to get a house because houses are expensive, So there's little room in the budget should the rate increase on a tracker. So that's where a lot would possibly tend to opt for a fixed. Hope that helps. Yes, Grace. How do you write YouTubers? Or do you want to write it down? Tell me what you think, and then we'll have a look at it. Well, do you want to write it down on a piece of paper? Here you go. Here you go. Write it in here, and I'll tell you how you're getting on. You show me what you think. Give you a pen. Here you go. You can have this pen. It's funky. Try that one. Why would someone buy now? The housing market is falling. Someone would buy now because they want to buy a house. The housing market is falling. It's not going to crash. There is a slight slide in prices, but actually, if you look at previous data from Halifax and NatWest, they both said that house prices month on month increased by 1%. So, do you really? There you go. That's Expo YouTubers. Essex. There you go. Essex is holding the market. Yeah, depends on location, very much so. Cited a 550 house, equity 200 on the ladder already. How do I narrow down what's best for me? How do you mean? In terms of a mortgage, speak to a mortgage broker, Dave. Book a call in. I'll have that chat. NatWest offered 5.45. Do you think there's never a good time to buy, long run average? Okay, so I don't think there's ever a right time to buy. I don't think there's ever a wrong time to buy. It comes down to you and your personal circumstances. If you want to buy, if you can afford it, then buy. Over the period of home ownership, there's going to be ups and downs in life, in economy, house prices, all that kind of stuff. Little you can do about it. So my advice would be is just ignore the noise and decide on what is right for you. Can I have a buy to let and live in it with 2 tenants? No, there. I'll have to look into that. There'll be certain. Potentially, yes, you could be a living landlord, yeah, but there's not going to be a huge amount of lenders you're going to have a choice of. Thank you, M Dog. Appreciate that. Currently have 40% deposit. Nice. What interest rate should I look at as a first-time buyer with good credit scores? Wow. Okay, Brandon, you could be looking, if you're looking at a 5-year fix, for example, you could be looking at 4.53, 4.6, something like that. Nice deposit to have. Nice one. Isn't the housing market heading for a big crash? It's been heading for a big crash for the last 2 years. Overall interest rates are about to jump. Who told you interest rates are about to jump? Everyone I've spoken to is looking to next year with great positivity. We're expecting next year to get busy. I find he's really insightful. Thanks. Thank you, Bailey. Thank you. Very, very good. Very much appreciate that. House prices will increase when rates drop again. Exactly. And look what the Bank of England base rate is predicted to do from that graph. Fixed rates are already reducing. We're seeing it. I get an email every day from lenders saying that they're reducing their rates. In fact, that reminds me, Mr. Leather, if you're still on here, let me just double check something. No, I won't have to do that. Sorry, false alarm. Remortgage or 6% loan to value, mortgage after divorce, and removing X from loan deeds. Any advice? Make sure you get a good conveyancer on your side for that. Dan thinks it's going to be a mini property boom, potentially. I mean, look at it over time. How often have house prices actually fallen, and how quickly have they recovered? Look at it over time. House prices in the UK tend to only really go one way. House prices aren't really dropping. That's right. There are fewer buyers right now, but no major drops. Exactly. They will soon come back. Don't worry. Don't worry about it. Yeah, Dan, hardly. Exactly. So in our lifetimes, I mean, house prices there may have been a drop at some point, but they have shot straight back. Shot straight back. Thoughts on where to put 25 to gain interest? You'd need to speak to an IFA. Do you think it's worth putting 11, 12% deposit to avoid negative equity on a short fixed term? It depends what you're buying, where you're buying, and the more deposit you put in, the greater you lessen the chance of. The greater you lessen the chance. That doesn't make sense, but the lesser the chance of negative equity. But I don't think you're going to get negative equity at 11 or 10%. An IFA. Lovely's ticked off. Good. I hold my hands up. I don't stray into IFA territory. I'm not qualified to do it, so I don't. Porting old mortgage deal onto a new property and 7 months after completion. How soon making you up? So look at it 6 months prior before the deal ending. Mortgage is currently expected to go £700 a month, nearly double. Is it worth going interest only? Think carefully about it, because you'll have to plot a way to come back off that. It will only be a very short-term option if you do go down that route. A prenup is, from my knowledge, an agreement you make before getting married to set out who owns what in the state of a divorce. But I'm no solicitor, so that's what I think it is. Is 4 times salary rule still decent calculation? I've heard some places doing 7. No, it's doing 7. 4.5 is a good ballpark figure. If you're a higher earner, you could potentially look to 5.5, but not 7. Is 5-year fix feel a good option? I can't give that advice on TikTok, I'm afraid, because I need to know your full circumstances. How you find things just now? It feels like such a different industry to be at the moment. Well, I've been advising for since about early 21, so I've only known the shit side of things, I think. And actually, it's all right. I'm all right. This isn't my. I have another company. Total transparency that pays the bills, so I'm relatively lucky from that aspect because this is a building thing. It's building. I am busy, which is awesome. But I'm sensing I've got a lot of optimism for next year. Spring to summer 2024, I've got a lot of optimism. So do the guys actually. Grace, we've been doing this for over an hour and a quarter. Own nothing and be happy. I can, yeah. Yeah, I can agree with that. Or you can own stuff and still be happy. Don't have to get down in the dumps if you own things. Down in Somerset near Glastonbury, there's a lot of people that live in caravans, and I'd go past and think, oh, I'm quite jealous of that lifestyle sometimes. Out in the woods, be bliss. Do you agree it's buyer's market? I feel owners are overvalued. I think so. I mean, there's been one near us that went on the market 9 months ago for 475. It was then taken off and put back on at offers over 450. The other day, it reduced to offers over 425. So I think, it's not necessarily sellers that are overpricing. It's potentially estate agents, because the typical estate agent trick is to say, oh, a house might be worth 400. They go, oh, I'll easily get you 450 for this if you list it with us, no problem. The seller goes, oh, that's great. So they list it with them. 6 weeks later, they've reduced it to 400. It's just to get the business on. How long would I fix for? Depends on my circumstances. My answer will be very different to yours. So my options would probably be quite different to yours. So I couldn't say. I can only give that advice if I know your circumstances. Do I need to wait a certain period after completion to be able to do a remortgage? I've heard 6 months. 6 months is a good period of time. Depends on your lender. Depends some lenders offer what's called a day one remortgage. Not all do. So it'd be a case of looking at your lender, what their criteria is. What happens in mortgage evaluation if they decide it's not worth what it was offered? Then you've got a problem because they're not going to lend. They're not going to lend what you need. So either you renegotiate the price or you put more down as deposit, but you're potentially buying an overpriced asset. Yeah, agree with the estate agent giving false hope. Yes, I think so. Yeah. Yeah. Right. I think we should wrap this up now, Grace. You don't want to? Why not? Now I'm going to wrap up the live. I would just give a final shout out to say, if you want to book in a call, go ahead. The link is in the bio. Click on that and you can book a call straight into my diary, and I'll give you a call and we can chat about things. And a reminder, this has also been going out live on YouTube, and it will be as a video on YouTube in the next couple of minutes. So look at the Mellow Financial YouTube channel. There's also going to be other videos about behind the scenes and all that kind of stuff. So have a look at those. Thanks for joining me. Do get in touch if you want any help, and don't forget to tell your friends that there's an awesome mortgage advisor about me, by the way. Yeah. Thanks. Enjoy the rest of your weekends, and hope to see you again soon. Take care, everyone. Cheers. Bye-bye. Well, I'm trying to end it, but it's not. There we go. See you later. Bye-bye.